Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had an amazing trading day on Friday and a great weekend as we have started our weekend off after our breakout to the upside on Friday and pulling back just a little bit after the Friday run, down 2 points in the S&P, down 7 points in the NASDAQ. We did see pretty big moves in both gold and crude oil as well on Friday, and so what will happen with those is what we'll talk about today. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you are a returning visitor, hit that like button. It helps the computer algorithms to know that people are actually paying attention. All right, let's dive right in. So the first thing on my list is the S&P being down 2 points from Friday's high. Now, Friday we broke out to the upside. For those of you that were watching the Daily Market Commentary, we had a breakout that we talked about with price rallying up out of that zone. Did have a little bit of a supply level in here. Price popped just above that, and then we did get a little sell-off from that zone. Now, last night in the live trade room, we looked at this little 15-minute area for a potential reversal. But I don't like the basing that we're getting in front of that level at this point, so I'm going to remove it just due to the fact that we've got basing in front of that zone, and it lowers the probability of the success of that particular level. I think there's a chance that we will, retrace some of this movement early this week, and so you could potentially get a breakdown below this area here if we get basing in this region. I would need to get basing in this level here for me to consider that as a potential breakdown. I'd still need basing somewhere in here, but I think that could occur. Now, on a 4-hour chart, we're definitely in a bigger picture upward trend. So anything short is going to be lower risk. It's going to be higher risk. But that's where breakdowns get pretty effective in these kind of market conditions. Looking at the NQ, same thing in the NQ, although I didn't have the supply level here in the NQ. We are a little bit of ways away from the all-time high here, but not quite there as of yet. Had a supply level up here that when we came close to, didn't get in. I don't like the NQ for the breakdown as much as I like the 1 hour on the S&P. I think that's a better potential than a NASDAQ breakdown would be. Looking at crude oil, so in crude, we looked at this one last night as a potential for a short, and it was this little 15-minute level, and we came in and got one little touch on that level as it came and touched the level. It did wind up coming down, hitting our price target, which is where we anticipate that it would make it to. Not sure if anybody jumped in on that one last night inside of the live trade room. It was not a very wide level, not a great level. So if you didn't catch it, I would not have an issue with that one bit. Although we did get a little bit of a sell-off to that zone. So now what does it give me on the hourly chart? On the hourly chart, we've come back to the midway point that exists in this speed candle, and so oftentimes those speed candles will get retraced, and let's see if price continues down. I think from here, since we're at that level, this is typically going to be a place where I oftentimes see a bit of a reversal. At a 50% retracement of a speed candle in a prior area of resistance, there's a good chance that we'll see price move up from here. But I don't know how high it'll move up, and I think we could maybe just hit up to here and then come back down. So I'm not gonna really do anything today in crude oil. I'm gonna let this be and create some better zones aside from the ones that we have in place down here, knowing that I still have a potential for a breakout up above me. Now, interestingly enough, talking about breakouts, a lot of people would consider this a false breakout. Many people would consider this a false breakout. In the comment section down below, let me know why this is not a false breakout. And I think that's it's good for people to type that in. But why is this not a false breakout? A lot of people who don't understand breakouts would call this a false breakout, but those of us who trade them on a pretty regular basis and have a clearly defined rules That's a tongue twister. Clearly defined rule basis would say that this is not a false breakout. So do me a favor, leave it in the comment section down below. It'll be a nice little quiz for you. In gold, let's take a look at gold. Now you see gold is in yellow here, and the reason it's in yellow is because we were actually looking at an iron condor for gold that is between 1505 and 1430. So there is a potential for that for those of you that trade options. It's on the weekly. It's on the weekly options that expire in just a few days. But if you are looking at some of the other things that we're looking at in gold, we did get a big sell-off on Friday, getting a bit of a rally. And so if I just pull a Fibonacci retracement of this latest move, I'm going to look for the 38.2 retracement line. And when I pull that, we're coming to the 23.6 right now. The 38.2 would be at this 1471 area. Now, if I zoom in on that and go to the 15-minute chart, you see that at that level we've got a little bit of a potential reversal point. So I'm gonna just use this as kind of a guide to tell me that we may see a candle-to-candle opportunity at about that level. So keep an eye between 1471 and 1474 for a candle-to-candle short opportunity on half of the retracement. If it doesn't play in then this 1476 looks good because it's an old area of demand that we could see. But ultimately, I think that you've got, you're going to get a bit of a short covering rally up, and then you've got a shot for a candle-to-candle move coming back down. In our bond markets, last night we didn't really look at a level because I wanted to wait until the European market opened to see exactly what we would do. And that was really the better play because it didn't do anything. And so I don't really have a whole lot to add on this one either. We did have this big move down on Friday. And looking at that on a 15-minute, you could theoretically just take this whole part of this candlestick here. What I'm going to do is look at this area here, which is the 15-minute level. We didn't quite make it up to there, but oftentimes I see that we will sneak just above that speed candle into this reversal area, and we could see price coming back down out of here. So let's keep an eye on that one for today. The Aussie, we decided not to add any new levels to the Aussie because our 4-hour chart is really just kind of creating a bit of a triangle pattern, which typically leads for some sort of a breakout. And so keep an eye on this one for today to kind of break down from here. I think your better probability is for price to break down. And so you can take the breakdown if you so choose, as long as we get the right amount of basing. But your better chances are the reversals a bit lower, which we found a decent one down in here. In the euro, we're rallying up to our 15-minute euro level that we had talked about in the trade room last night. This little area here off of this big sell-off. My only issue with this level right now is that I've got my first target has to be here because this is the opposing area of demand. Well, if this is the opposing area of demand and my stop would have to go above here because I want to be above this wick on that area, I've got essentially a 1-to-1 reward to risk. So obviously it's higher, it's lower probability on this trade. So manage your risk accordingly inside of there. I'm going to remove it because I just don't like that risk to reward scenario. In the Canadian dollar, we did have a huge sell-off. What's funny is that on the Friday daily market commentary, I looked at this area of demand and said, well, here's a good area of demand. I don't expect to get there until the middle of next week. And then it was about an hour and a half later that we got there. Price came into this level. Now, interestingly enough, we did hit our demand level that we spoke about, but we didn't get a big move out of it, which actually sets up better for a breakout downside. So we're going to keep an eye on this level for later today. Great British Pound, Japanese Yen. As we look at the pound and the yen, we have price continuing to rally higher in the pound. If I go to the daily chart, you will see that we are sitting right at this supply level and we've come up into it. Now this area is a retest of all this noise over here to the left. So I think there's a better chance that we continue to move higher. So if I go down to the hourly chart and I'm looking for an opportunity to get long, we've got a couple of nice levels here as chances to get long, but I don't have really any clean ones inside of here unless I go smaller. And as I go smaller, do I have clean ones in here? Well, this level right here is not too terrible. Decent little rally point. If we come back down into this region, I also, potentially could see a breakout from where we are. And then in the Japanese yen, we have rallied way up. Once again, this is yet another one that's a false breakout. For those of you that think of this as a breakout, it is not a false breakout. It is a false breakout. It is not a false breakout, and it doesn't follow the breakout rules. Oh, one of those mornings already today. So there's no reason to enter that trade, which is why it's not a false breakout. But I know a lot of people were looking at it and saying, well, we broke above its resistance, we're going to get long, and then immediately it comes screaming back down, and they call it a false breakout. Well, that's not the case because it's missing a key component. Same thing on this one with the 4-hour chart, in that we are putting in higher swing highs, higher swing lows. So your better probabilities are to look to upside trades. When I go to the 15-minute chart, this is the European market open, but it is a decent little Globex area. So if you wanted to try this little level here, I think there's a decent case to be made for that. Remember, it's Globex, so it's going to be slightly lower probability, but it is a fairly small little zone and a chance to get back in if we do give a little retest of this. So that's what we have for today. Leave me a comment down below. Let me know how you traded Friday's breakout to the upside. And then if you've got any questions, please send us an email, support@tradersarmy.com. Till tomorrow, everybody. Have a great day. See ya.